Welcome back to my channel here at TradingView. My name is Sammy. Today I'm going to be talking about a tool I use every single day right before I take a trade. It has to be drawn on my charts. So please like the video, subscribe to my channel, and join the Discord. This powerful tool I'm talking about is called the parallel channel. It helps you identify key support and resistance on a chart. So first and foremost, let's go ahead and delete this. Where do you find the parallel channel on the TradingView platform? You're going to click on this secondary square right here. You're going to click the arrow. It's going to open up a toolkit, and then you're going to find channels, subsection channel, and right under it, you're going to see parallel channel. And this is, moving forward, this is my process on how to draw parallel channels on the chart and the process that I go about it. So first things first, I like to go on the monthly time frame, all right? And there's two ways to actually set up the parallel channel. Some people prefer wick to wick, and other people prefer body to body candles, okay? Preferably me, I like to draw wick to wick. I like to capture all the liquidity. Body to body candles is a little bit more cleaner, but I have a specific style of trading, so I'm going to go ahead and do it wick to wick. So in this case, I see that we identified a wick here and a wick here. So it's always left to right, okay? Through the anchor point system process. The first two are identifying the trend. The last is finding the support or resistance. So in this case, we see a high and a higher high. So you're going to go ahead and take it here from the high to the higher high, and find the absolute bottom, in this case this wick here, okay? And then the secondary step I like to do is go in the weekly time frame and then stretch it a little bit, find the recent price action, which is roughly 95 cents, and then look left, okay? Look left. This will help you identify if prior history was respecting certain trends on this parallel channel tool. And thus, long and behold, if you see right away that you have a clean bullish and bearish engulfing candles rejecting this monthly trend line. This adds confluence that how we drew it, it was almost near perfect. Okay, and we continue to find confluence just to make sure we drew it right. So you keep continuing looking left. Okay, so we found out that price action, this was respecting this trend line because we see an engulfing candle break into it, back testing that breakout, and then rejecting it, breaking into it, getting that engulfing terminal candle, back testing the breakout, and rejecting this trend line. So let's continue. Oh, perfect. We have a cluster here. We have a candle here. Look at this. We have a resistance here. Then we had the breakout. We back tested this trend line, this monthly trend, and then we back tested again, and thus rejection. And look at that bearish engulfing candle. Okay, so what do you notice about the parallel channels right away? Right now you see that price action is trying to break above a key resistance trend line. For the sake of this conversation, we're looking at 88 Cardano. We knew that we technically never broke out of this trend, right? So from a risk reward, if the price action is making higher highs and higher lows, at some point, if it's going to make a new trend to the upside, you know that the key resistance is going to be what? That's right. It's going to be this monthly trend line that we drew. So hypothetically, if price action were to continue upward, you would more than likely have an exit strategy off this trend line based on price history. And it has been very consistent that this trend line has been a huge rejection for multiple months, if not years, and that's very important. Okay, see how powerful this tool is? That you can identify trends within a 3-step rule process. It's powerful because this can make or break a trade for some folks. And if you were to take this trade, hypothetically, all right, let's clean this up a little bit. If you were to take this trade right now and draw your percentage gains, if you were to swing this and hit that trend line, that's a 66% swing trade, hypothetically, that you can ride identifying a key resistance level. Key resistance level, 66%. That's how powerful this tool is. And look, I'll go on the monthly. What does it help you understand as well? You notice that it's also respecting this lower band. Your absolute support is this lower band. Well, on the monthly, we see that price action has found a bottom on this trend line. So if we somehow have a catalyst where price completely just falls off a cliff, we know that the next new higher low, more than likely, is going to be what? This trend line. And then you probably buy the dip, and then you write it up, finding key resistance level, but your absolute other area of resistance, more than likely, is going to be where price action always rejected and found support. Very simple, very powerful. Let's take a look at Lucid. This one I wanted to show you guys from the downward perspective, okay? Because if we look at 88, it's somewhat in an upward trend, sort of, okay? But look at Lucid from another perspective. It's on a downward clean trend. So how do you set up a parallel channel drawing this? So you take it from support, another key support area, wick to wick. I see that we only have a body here, from wick to wick. Okay, take it from here, and you take it from resistance. So 3 anchor point system process. Okay, from wick to wick. In this case, we have body candles here, and then the wick low here, and then you find the resistance. As to 88, we did it from left to right. Remember that, left to right. From wick to wick, from a high and a higher high, but in this case we have a low and a lower low, and finding the high, the key resistance line. And thus, long and behold, what is price action doing on Lucid? Okay, all right. So I like to go back into the weekly, find the price action, and look what price is trying to do on this mid-lower band line. Look at this candle here. What do you see? Resistance level off this monthly trend line. What do you see here? That's a wick. Price found a bottom, and then obviously we kept going down. Okay, what do you see here? Resistance support. That's adds confluence that how we drew the trend line was near perfect. Look at this cluster on your left. Support, wicks, wicks, resistance, wicks, wicks. Body candle closure right on the trend line. So if I keep continuing looking left, I know that price action, look at this one, is going to cleanly, in some ways, respect this monthly trend line. So in a 3-step rule process, a very simple tool such as parallel channel helps you identify, are we breaking out of a trend? Is the trend continuation, going lower lows and lower highs? Are we going to start making higher highs? Are we breaking out of this trend line, then finding support, right? Breaking out of this trend line once and for all, finding backtesting support, because it likes to break out and then backtest support and then make new lower highs, okay, new lower highs. We see here that we're actually finding new lower lows, but the point is, what I'm trying to make sense of is that now you are identifying the trend on a said ticker. It doesn't matter which way you look at it, but I know that if I see this, I know that price action needs to break out of this trend line, start forming above, and then finding resistance here. Because the last time we actually had that midline resistance here was back here in 2023. We never went back to this mid band line since 2023. So right now, from what I look from just drawing off the parallel channel, Lucifer, in this sake, never really broke any trend. It sort of looked like it's finding a little bit of life, but that's a TA for another day. But it's just identifying a risk reward, key support, and resistance. What is your risk tolerance, and what are you willing to bet on? Okay, are you willing to if it breaks this lower trend line? Well, look what price likes to do once it breaks this lower trend line. Okay, so we break into it, we back test it. Look at support, resist, back test it, and then huge decline. Okay, here's another one. Rejection. Try to back test it. Huge decline. Excuse me. Look at that's a 46% downward rejection once you hit that trend line. Okay. Again, let me clean it up a little bit. Okay. Here's another rejection, as what I mentioned before. Another rejection here brought you back down to 40%. So we know this trend line is very important because it always does a huge sell-off once you rejected this trend. And look at that. It's very powerful to identify key support and resistance. So before you take a trade, before you go ahead and put your money in the casino, always draw a parallel channel to understand the strength of the trend and identifying key support and resistance. It's very, very simple because I see a lot of people in the community, specifically in the trading community, where they don't know where support and resistance is. But this one simple tool, 3-step process, helps alleviate that pain, that headache. Literally helps it. So please like the video, subscribe to my channel, and join the Discord. Thank you so much. I'm going to be doing more educational series just as this, and I look forward to it. So join the Discord, like the video. Cheers.